What if the biggest financial asset you have is the one you've completely overlooked in your retirement plan? For so many of us, planning for retirement feels like trying to solve this giant, complicated riddle. I mean, how do you make sure your money lasts? Especially when you want to keep living the lifestyle you've worked so hard to build. It's a question that honestly keeps a lot of folks up at night.
So, just for a second, think about your own retirement plan right now. You've probably got Social Security lined up, maybe a 401k, or even a pension. But what if there's a missing piece to that puzzle? A really powerful resource that you haven't even thought to tap into yet? Look, putting all your eggs in one basket is a huge gamble in retirement. I mean, just imagine the stock market takes a nosedive right when you need to pull some money out. Or what if inflation starts eating away at the value of your pension? All of a sudden, your financial security is on pretty shaky ground. That's why diversifying your income isn't just some fancy buzzword, it's absolutely essential.
So, where do you find this other stream of income? Well, for a whole lot of people, the answer is literally right under their feet. Yeah, I'm talking about your home equity, which is often the largest and most untapped asset that you own.
Okay, so how do you actually unlock this hidden value? The main tool here is something called a reverse mortgage. To put it simply, it's a special kind of loan for homeowners who are 62 and older. It lets you turn a piece of your home's equity into cash. But, and here's the real game changer, you don't have to make any monthly mortgage payments on it. And, the best part is just how flexible it is. Let's say you need a big chunk of money for a major home renovation. You can take it as a lump sum. Or maybe you just want to boost your income every month. Well, you can set it up to get regular payments. Or, and this one's really popular, you can have a line of credit just sitting there on standby for emergencies. It's totally tailored to what you need. Now, this all sounds pretty good in theory, right? But how does it actually work in the real world? Let's break down 4 super practical strategies for combining a reverse mortgage with the other retirement income you already have. First up, let's pair it with Social Security. So think of your Social Security check as your monthly budget for the basics. Groceries, utilities, the day-to-day stuff. But what happens when the water heater suddenly breaks? Well, instead of draining your savings, you could use the reverse mortgage to cover that. Your regular monthly budget stays completely untouched. Okay, next, let's talk about pensions. A pension is fantastic for that steady, consistent income, but it's usually a fixed amount, right? It has its limits. This is where a reverse mortgage line of credit can act as your financial shock absorber. It's just there, waiting for a sudden car repair or an unexpected medical bill. It's ready to use, but it costs you nothing until you actually draw from it. Now, for anyone with a 401k or an IRA, this strategy is a total game changer. Think about it. When the market is down, the absolute worst thing you can do is sell your investments at a loss. With a reverse mortgage, you don't have to. You can live off the funds from your home's equity for a while and just give your portfolio time to recover. It's such a powerful way to ride out those market storms. And finally, let's look at annuities. An annuity is great for guaranteeing that your essential living expenses are covered. But what about all the fun stuff? The things that make retirement enjoyable. Well, the reverse mortgage can become your lifestyle fund. It's what pays for that trip to see the grandkids, or the new golf clubs, or those art classes you've always wanted to take, all without touching the money you need for your essential bills. So when you put this all together, you get what we call a layered approach to your income. Think of it like this. Layer 1 is your guaranteed income from Social Security or a pension. That covers all the essentials. Layer 2 is your investments, which you let grow for your long-term goals. And then you have Layer 3, your home equity, which gives you that amazing flexibility and acts as a buffer. Each layer has its own specific job, and together they create a much, much stronger financial foundation. All right, a reverse mortgage is obviously a powerful tool, but it is so important that you understand all the details. So let's walk through some of the most important things you absolutely need to know. Okay, one of the biggest, and I mean biggest advantages, is how the money is treated by the IRS. Because it's technically a loan advance, not income, the funds you get from a reverse mortgage are tax-free. This is a huge deal because it won't bump you up into a higher tax bracket or anything like that. Now, even though you don't have that monthly mortgage payment anymore, you're still the owner of your home, and that means you'll still need to handle the usual responsibilities, like paying your property taxes, keeping up with your homeowner's insurance, and just making sure the house is in good shape. A common worry people have is, could I be forced to leave my home? And the answer is a clear no. As long as you actually live in the home as your primary residence and you keep up with those obligations, the taxes, the insurance, and the maintenance, you can stay there for as long as you like. The loan only becomes due when you permanently move out.
Okay, let's do a quick fire round and cover some of the most common questions that people have about all this. A really big one is, of course, how does getting a reverse mortgage affect my Social Security or Medicare benefits? And the good news here is it doesn't. Simple as that. Since the money you receive is considered a loan advance and not income, it does not affect your eligibility for Social Security or Medicare benefits. And of course, people always want to know what this means for their family. What happens to the loan after they're gone? Your family or your heirs will have several options. They can sell the house, pay off the loan balance, and then they get to keep any money that's left over. Or if they want to keep the house, they can choose to pay off the loan themselves, maybe by refinancing it. And here is the most important part. They will never owe more than the home is worth. That is a key protection built right into the loan. So when you step back and look at the whole picture, you can see that your home isn't just a place filled with amazing memories. It can also be a really powerful financial tool that helps you build a more secure and, frankly, a more enjoyable retirement.